Good afternoon, team. I wanted to do a quick little bonus video for today, just because of the action today. I wanted just to cover some things here. All right, so the market, we undercut, we undercut these lows. We undercut this low here yesterday and today, and we closed above the low of the day, but it's still below this low. So that's a negative sign. I have this little trend line coming in here for this last 2 days. It's been on high volume, so definitely negative action. I was surprised that we were actually up today, seeing how Google was, so much down today. I'll go into it now. Let me look at the one we always look at here. So the last couple of days, this is kind of has been the channel right around there. We hit the high, midday, and then we kind of sold off from there. The morning was kind of nice too. Kind of picked our head here, and then we kind of came down. I mean, the volatility is just insane in this market. So we closed at the bottom of the day. So we're definitely on a wedging down scenario. So any little move up, it's definitely shortable. But I want to get to at least 330 before I start heavy shorting things. But today I was able to short some of I was posting because we were up for a pretty good amount of time during the day, so it gave me an opportunity, and then we sold off to end the day. So let me look at the SPY. It's pretty much the same thing, pretty much the same thing. Now, here's what I want. Why I kind of want to make this video here. After hours, we're up, pretty nicely, and this because Facebook reported Meta, and their numbers were astronomical. They were down 3% during the day, 6 points. They're up 13%, 23 points after market. So that's definitely helping the Nasdaq. Hopefully this sustains, and then we have a nice update tomorrow. I would love, like I said, I would love to take a huge loss on my short futures, because if I take a huge loss on my short futures, my portfolio is going to go up 5 to 7x whatever I lose on the on those futures. So I'm more afraid of the downside drawdowns than a snapback rally. We got a snapback rally. I'm going to be very well off on what I currently have, even though I'll take a loss on the futures. But again, it's the hedge. This is an overall. Okay, this is an overall down market. Okay, so any little rally, it's shortable until we get above the 50 again. Then we start looking at headwind on the 200, which we had here, and both times we sold off. So if we get a rally to 350, again, we're still 30 points away. I mean, it's just still a long way. This is going to be a good resistance level. Remember, we still have this little gap here. I haven't forgotten about this little gap that we never got filled. So that could eventually get filled, and then we sell off again. Or we hover around here for a little bit, and then we hit the 200. We hover around for a little bit, and then that's going to be the telltale sign whether we're all good or we're just in this, this crap right here, and then we fall back down again. So day by day. Right now, tomorrow looks promising. Yesterday looked promising too, and we had a nice, almost 200-point morning, and then we just sold off the rest of the day. I was able to, sell some things, some shorts on Zim and so forth. Zim had a good day, up 7%. That was definitely a saving grace in my portfolio. I have the 60s. I had the 60s short put, and I sold a lot of short calls against it. My cost basis is about 57 due to my credit that I received. So I'm kind of like a break even right now from this right here being a nice little drawdown. So this has been very unexpected and welcoming. SQ was kind of flat, didn't do anything. Again, I have the 95. I've been selling shorts against it. The one STLD, that's a new purchase I did today. Here's my reasoning behind it. Okay, it did break out. It did it didn't break out. Let me rephrase that. it poked its head above the pivot. It poked its head above the pivot. The volume was nice. It wasn't great. I mean, you want to see like 30-40% volume increase. This is, I mean, I'm just, taking a wishful thinking here that's going to, take off. But again, the reason why, because the last 3 days has held the 21. And before, when it was to the 21 level, it held it nicely as well. So I'm right in the 21 until it fails. So it's a good risk reward because, we can, I mean, look, the same, what I would tell you guys, this trend line, when it broke here at 90, it went to 100, then it reversed all the way back to 85, and now it's back to the 88, 89, 87 range, around there. It could hover a little bit. As long as the 21 holds, it's really not doing anything wrong. Let me clean this up. So as long as the 21 holds, it's not doing anything wrong. They already reported earnings, so we don't have any issues with earnings. The earnings per share was up 187%. I mean, that's just incredible numbers. 623, 873, 496, 187. I mean, when you have these numbers, and then your next quarter still beats those numbers, that's just insane. I mean, 6.02 from 210, that's incredible. You're going from 16 to 19 next year. Yeah, 2023 is a little bit of drawdown, but that's like 2 years away. The market is about 6 to 9 months ahead. So we're still playing with this number right here if we have any sustained growth. 21 is my line in the sand. As long as it keeps writing it, I'm going to keep writing it. If it goes to 100, I'm taking 50% off, and then, putting in like a 95 or 94 something, like stop here. And if it keeps on going, then, I just keep writing it. Again, the 21 is going to be my line in the sand. Okay? And then JBHT, I bought a put. Why? Because this breakout right here obviously failed, and then we had this huge candle here on a down day, and this validated the 50, validated 200. So what do I always tell you guys? If it breaks the 50, you're out. If it breaks the 200, you are definitely out. Nothing good happens below the 200. So on that line of thinking, I'm looking at this beautiful textbook wedge. The wedge is when you have a downtrend, and then you have a wedge is on the downtrend. Okay, not when you're going up and you go down. When you go up and you go down, that's a great setup for reversal to go higher. When you go down, when you're going down, okay, let me clean this up. When you're going down, and then you kind of go up a little bit, like here, this is a perfect shortable trade. That's just textbook. Okay, so I'm trading for this to go lower. I don't know how low. I don't know if it's going to go to 165. This low right here from 171. I don't know if it's going to go to 60, but this is a shortable technical pattern. Okay, where's my stop? My stop is probably right here. I probably will even take it because I bought a put, so I have a defined risk. But and then I sold against it to finance that. So I'm probably gonna take it to, like, again, if it breaks 181, the 200 is right here, so that could be support. So again, I'm gonna play it by ear. I'm gonna take it day by day, see what happens, assess the market, assess what's going on with everything. Everything's on a case by case basis. But for right now, today, as I stand here, this is a shortable technical pattern, and that's why I bought a put. Okay, and then what I did was, since it went with me, and I'm already up like 9% on it, I went ahead and sold against it a short put for the 160 to give me some more credit on my purchase long here. So now I lower my cost basis, I increase my return on my investment, and that's basically it. I mean, it's a beautiful trade right now. Everything else we pretty much have. So I just wanted to share that with you guys, the reason why I made those trades. Google, from remember last night's video, it was about 100, 140 at one point. It went to 60, so it kind of stayed in that 87, 90, 100, 85 range. It's up 28 after market. Why? Because Facebook is kicking butt. Okay, I like it. I like it. This should help the market tomorrow. Okay, so that means I'm gonna lose on my shorts. Love it, love it. Let me see what else. Nvidia is still freaking kicking my butt, but it was kind of flat. I mean, 2% is not that bad for Nvidia, and it's kind of like almost getting it back. I need this puppy to go to 200. I need 200 sometime soon on Nvidia, but we'll see what happens. Don't like this trade. Don't like this trade right here. I don't like this setup right here. It's kind of like the same wedge pattern I was telling you about. It went down. This didn't even go up. This went like sideways and then went down again. So not looking good. But again, I have a short put. I have credits received. So I got premium that I got paid. So my cost basis is it's not as bad as from 220 to 184. It's like the 195 to 184. It's really my drawdown. So it's not that bad. Okay, that's that. See what? Okay, so this is why. Let me bring this over here. This is what I was looking at. I sold. I have a lot of limit orders, like I was telling you guys. So I sold my position when it was right here, hedging against if we kind of like fall down a little more. We went up about 100 points. I sold when we were up about 30, 40 points. So I'm a little bit down on these hedges, which is awesome. I would love to be down like I thought. I would love to lose $2,000 on this tomorrow. If I lose $2,000 on this tomorrow, I'm up like 15 in my portfolio. So that's perfectly fine. So again, we got resistance here, and we got resistance on many levels here. So if we go up another 100 or 150 points tomorrow, that means we're going to open up tomorrow 250 points higher. 250 points higher on my portfolio, it's easily like a 12 to 15 grand up day. So I have no problem being down, $1,500, $1,000 on this. If it means we're up 200 points tomorrow, because that means Nvidia is up. All my shorts are going to be up, and all my short puts are going to be up, and they're going to be my portfolio overall is going to be profitable, and my drawdown is going to be decreased drastically. So that's where I'm at with this. I have four contracts right now on my futures, and I have a 300 point trading stop. So that means I'm risking $1,200. So if we go up 300 points, I will lose $1,200. If we go up 300 points on the Nasdaq, like I said, I'm probably going to be up about 15 on my portfolio. So that's a perfectly fine trade-off as an insurance policy, because I've been taking a lot of heat the last few days because of this. Okay, so I have no problem having a little 2 or 3 day relief. Even if we go up 250, I could maybe sell some more shorts. Okay, get some more credits, and if we fall back down again, then my hedges will come in play. My shorts that I sold will come in play, and I'll have a little bit less of a drawdown overall. So again, I'm just using every possible tool in my toolbox to trade around positions and just trade them and try to make as much profitable trades as I possibly can. All right, so just quick little short video. I wanted to show you guys what I did today and my thoughts are, and be safe tomorrow.